Hi, I'm Leanne Hall, real estate agent right here in Gig Harbor, Washington. Today, I need to talk to you about something that is happening right now this week. Like the clock is literally ticking. You've been hearing about the millionaire's tax. Here's what nobody's telling you. That's not the only tax proposal sitting in Olympia right now. There are four major tax packages being debated this season. Four. And some of them don't just affect millionaires. Now, I'm not here to tell you whether these are good or bad. That's not my job. My job is to help you make smart decisions about real estate. And right now, what's happening in Olympia is directly relevant to anyone thinking about buying, selling, thinking about moving to Washington State. So let's talk facts, real numbers, real bill names, and real dates. All right, let's go. Before we talk about the bills, you need to understand why this is happening. So Washington is started down a projected budget shortfall. The 2-year budget sits at roughly about $79 billion. And lawmakers are saying they don't have enough to cover what they've promised. Republicans will tell you this is a spending problem. Democrats will tell you it's a revenue problem. I'm not here to referee that. Both sides agree there is a gap and someone's going to have to pay for it. Lawmakers are sprinting to get these bills across the finish line. So let's walk through each proposal one by one. Okay, the big one, Senate Bill 6346. Here are the facts. This bill would impose a 9.9 tax on household income above $1 million per year. The first $1 million of income, not taxed. Only the amount above the million gets that 9.9% applied. If signed into law, it takes effect January 1st, 2028. So your first tax payments would be due 2029. This would be the first personal income tax in Washington state history. The bill did pass the Senate on February 16th of 2026. Vote was 27-22. 3 Democrats voted no, along with every Republican. One of those 3 Democrats? Senator Deb. She represents in Gig Harbor in our district. The House Finance Committee passed it on February 25th, 9-6. This is referred to House Rules on March 2nd. So session ends on March 12th. Is this a done deal? No, not yet. Less than 0.5% of Washington households, roughly 21,000 filers statewide. Supporters say it generates $3.7 billion per year. All right, and opponents are saying this crosses a line Washington has never crossed. And once you open this door to an income tax, that door doesn't close easily. A Democratic lawmaker was asked directly, can we trust that this won't expand to everyone? His answer, it shouldn't. I'll let you sit with that one. Okay, tax proposal number 2. This one is the one buyers and homeowners aren't paying enough attention to. There are 3 separate bills proposing a payroll expense tax on large employers in Washington. Senate Bill 6093, House Bill 2100, and Senate Bill 5796. All 3 impose a 5% tax on large employers, specifically on wages paid above a certain threshold. House Bill 2100 and Senate Bill 6093 set that threshold at $125,000, meaning a 5% payroll tax kicks in on any employee making more than $125,000 per year. Now, the Senate Bill 5796 sets it slightly higher at $184,500. All 3 are targeting companies with more than $7 million in payroll. Now, why does this matter for the housing market? So let's think about who employs Washington's high-income workers here. Amazon, Microsoft, Boeing, all the tech companies we have up here. So if we have a payroll tax on salaries above $125,000, is effectively a tax on the exact income bracket that drives home buying in markets like Bellevue, Kirkland, and yes, the South Sound. So when it costs more to employ high-income workers, some companies are pausing hiring. Some are relocating their operations, and some pass the costs on in ways that affect your compensation. So if you're wondering why compensation growth is slowing for high earners in Washington, their buying power is slowing down too. This is the one that tech workers and their employers are quietly watching very carefully. Now we get to the one that honestly keeps financial advisors up at night. There are two wealth tax bills currently in Washington legislature, Senate Bill 5797 and House Bill 1319. Both are referred to House Finance Committee. So what makes these different from everything else? A wealth tax is not a tax on money you earned. It's a tax on assets you own. Stocks, bonds, mutual funds, financial investments. So even if you haven't sold anything, even if you haven't made $1 this year, just by owning them, you would owe the tax. So Senate Bill 5797 proposes a 1% wealth tax on anyone with more than $50 million in financial assets. In Washington, that's proposing probably affecting about 4,300 Washingtonians. The revenue that would be estimated is about $4.1 billion in the first full year. So here's why real estate professionals are paying attention to this. The people who hold 50 million or more financial assets are often, very often, real estate investors, developers, and people who fund new housing projects. When you tax the value of these assets, not the sale, just the ownership, you change how people think about holding on to these assets. Many of my clients say, hey, I'm going to sell. Some are saying, I'm going to leave the state, I'm done. And some will restructure. Some of those people are currently funding apartment buildings, townhome developments, and new construction neighborhoods are right here in Washington. Here's the painful irony. So we already have a housing shortage. Gig Harbor, Tacoma, the South Sound. We need more housing, not less. If we reduce the pool of people willing to invest in new development, supply stays super tight for us. And what does tight supply mean? It means the prices are going to stay high. This is just housing economics. Here's the one thing you absolutely need to know. Even if Senate Bill 6346 passes, it will face a legal fight. The Washington Supreme Court ruled in 1933 that a graduated income tax is unconstitutional in our state. So Washington voters have rejected income tax proposals 10 times, mostly in 2010. Initiative 2111, passed by voters in 2024, prohibits new statewide income taxes. Supporters argue it's structured to get around that prohibition. Opponents say it doesn't. So Governor Ferguson has acknowledged that litigation is essentially inviable if this passes. So even if it passes, this story is far from over. Okay, practical time. If you're a move-up buyer looking in the $800K to $1.5 million range, watch the luxury market. Over the next 6 to 12 months and high-income buyers start leaving, you could see more inventory and real negotiating power. If you're in the $400,000 to $700,000 range, don't expect significant relief. That market will just stay tight. Now, if you're relocating from out of state, Washington looks very different from California or New York. The jobs are here, the quality of life is here, demand is not evaporating. If you already own a home, watch 3 things. Number 1, job growth in tech. Number 2, new construction permits. And number 3, what happens on March 12th? Does Senate Bill 6343 pass? Does it get pushed to a special session? Or does it fail entirely? This answer will tell us a lot about what comes next. So here's the bottom line. Washington is not just debating one tax, it's debating 4. A 9.9% income tax on millionaires, a 5% payroll tax on large employers, a wealth tax on assets above 50 million, and a possible county level business tax. All of this is in a 60-day session that ends March 12th. So the buyers and home buyers who understand what's happening are the ones that will make the best decisions. And if you want to talk through some of these strategic situations, reach out. I am lucky enough that my husband is a financial advisor, so he's on the other end of this, of hearing many clients talking about how this will affect them. I'm here to give you no fluff, no pressure, just real information. If you liked what you saw today, please give me that thumbs up. Would love to hear from you. I'm Leanne Hall, right here out of Gig Harbor, Washington. Stay tuned for my next video.